Hi, everybody. Thomas Morgan here with 1031navigator.com. This is a listener Q&A episode of the 1031 Exchange Passive Income and Investment Series. You can ask your own question at 1031navigator.com/ask. How much should I expect to invest in a quality property? One, that depends on your pocketbook, obviously, and it depends on your 1031 exchange and how much you have coming out of it. And then if you're going to do debt, it depends on the loan to value and the debt coverage ratio that a bank will loan to you and or your credit rating. So it really is individual investor specific. The sweet spot for triple net properties is kind of 2 million, or let's say $1.5 million to 10 million. You can get a good selection of almost any tenant, any credit, any lease term. When you get under $1 million, let's say 500,000 to $1 million, it becomes slim pickings, and there's a lot of short-term deals, double net leases, individual single unit operator credit. And under 500,000, there's really nothing. I did see one grease monkey for like 300,000 in January, but that went under contract right away. The lowest deal I think I've sold was like 650,000, something like that. And that was a little Captain D's. I've also done a Pizza Hut in the $600,000 range. So you can do deals below $1 million. To get Dollar General absolute net 15-year leases, you're going to have to be ideally in the $1.5 million to $1.2 million to $1.8 million range to get a good piece of real estate, 15-year absolute net, triple net Dollar General. I'm doing some Dollar Generals absolute net right now under $1 million, like let's say 900,000 to $1 million, but they're not very populous. That's just the price point the client wants to be at, and that's what their cash threshold is. They don't want to add debt, and I've done 2 others like that in the last 12 months. Where the client just wanted to be between 900,000 and $1 million. And so that's where we looked. You could do some double net Dollar Generals in the $700,000 to $800,000 range, but those are going to be shorter leases. You're going to have to be responsible for roof structure, parking lot, HVAC, stuff like that. So I don't really recommend those, unless that's, you want a higher cap rate, you're willing to take the risk. Walgreens, for example, CVS, you really need to be in the $5 million to $10 million range. Or maybe you could go down to 3 million. I've seen a couple of CVS's below 5 million, but those are going to be rural locations, or maybe a pharmacy chain that CVS or Walgreens had acquired previously. So they're smaller buildings. They're not their standard prototype building. But if you want their normal building, 14,000 square foot or so, for Walgreens, 10 to 11,000 square foot for CVS, you're going to have to be above 5 million, and we can probably find you a good drugstore up to 15 million. Anything above that, you're probably overpaying for the real estate, and they're probably paying too much rent unless you're like downtown Miami or downtown New York City or LA, something like that. But it really goes back to how much money you have available coming from your 1031, how much cash you have available, and your access to credit. And the access to credit is going to be governed by the loan to value, debt coverage ratio, personal credit score, stuff like that with the lender. That does it for today's listener question. Hopefully you got some real value out of that. To ask your own commercial and investment real estate question related to 1031 exchanges and or triple net properties or other passive income real estate, please visit 1031navigator.com/ask. Again, that's 1031navigator.com/ask. You can also leave a question by leaving a direct voicemail at the podcast hotline 970-300-1994. Again, ask your question by leaving a voicemail at 970-300-1994. Thanks for listening to the 1031 Exchange Passive Income and Investment Series. Hopefully it's helping you create, build, and protect your wealth. Talk to you soon.
And remember, this show is provided for your informational and educational purposes only. Be sure to check with your accountant, lawyer, and/or other tax professionals and advisors before relying on this information. Although the information contained herein is believed to be accurate and reliable, we do not guarantee its accuracy or completeness, and it is provided without warranty. Common sense is the best practice.